Greetings everyone, and here's the FOMO meeting dark candle. In this video, we're going to dig deep down in essential words and terms of digital currencies and trading. This is terminology part 1, and we're going to start from some basic words, and then after we're going to get more advanced step by step. The first word is whales. Whales are referred to those who have large amount of currency in their wallet and they can affect the price trend. For example, you need 1,000 bitcoins to become a whale. Bullish and bearish market. Bullish market is when the number of buyers and their power is greater than the sellers, leading the price going up. Conversely, when the power and number of sellers are more than buyers, leading the price going down is called bearish, and it is obtained from the behavior of these two animals when they want to hunt or engage. A trend neither ascending nor descending is called range. Usually floors or ceilings don't show the process. A range refers to the price level at which a cryptocurrency fluctuates over a specific period, often between a high and a low. Traders often look for the patterns within ranges to make decisions. When the price rests after a bullish rally in a short period of time, it is said that it's in the base period. In trading, the base is the initial price level from which traders expect an asset to rise or fall. It can also refer to a stable price point before significant movement occurs. Mooning. Mooning describes when the price of a cryptocurrency is rapidly increasing, often to the point where it seems like it's heading for the moon, and it is generally used when the price is rising a lot. Traders often use this term to express excitement about significant price gains. All-time high is the highest price in history, and on the other hand, all-time low is the lowest price in history. When the price increases a lot in a short time is called pump. A pump refers to a sudden and significant increase in the price of a cryptocurrency, often driven by high trading volume or coordinated buying efforts. This can be a part of a pump and dump scheme where prices are artificially inflated. When the price engages with a resistance and breaks with a strong candle is called jump. It is used to describe a sudden increase in price, often a smaller movement, a pump than a pump, but still significant enough to notice. Market cap. Total market value is called market cap, obtained from multiplying total number of bitcoins by their price to get their total value, and either called market capitalization. Total supply is total coins available, and it is the total coins available will ever exist for cryptocurrency. This figure is important for understanding scarcity and potential value. Circulating supply is the number of coins that are currently available for trading in the market. It can impact the price and market cap calculations. Dump and crash. When the price drops too fast is called dump, but when nothing can stop the price from falling is called crash. A crash is a rapid severe drop in the price of cryptocurrency, often triggered by negative news or market events leading to panic selling. But dump refers to a sudden and significant decrease in the price of a cryptocurrency, often due to a large number of sellers in the market. Fear of missing out, or FOMO, abbreviatedly. When you have information about an asset and it starts to grow, but you're wondering whether to buy or not, and the asset keeps going up and everyone talks about it, and yet you haven't bought. After a while, you get involved in fear of missing out the asset. Here, many novice investors enter and generally buy near the ceiling and suffer losses. Here is the best point to exit. This is what professional traders do, and fear, uncertainty, and doubt, FUAD. It occurs when the market falls, rumors are spread, and fear increases in the market. Here, experienced investors look for entry points. This is the best entry point either. Thanks for watching this video and keep up with us till the next one.